Hey everyone, welcome back to Corporate Decoder. Today, Glass Incorporated just filed their latest 8K report, and I am seeing some very interesting voting results from their annual meeting that you need to know about. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company held its annual meeting and shareholders voted on key proposals. Let's dive into what those votes actually mean for the company. This filing is an 8K, which is basically a report for significant events that shareholders should know about right away. Glass Incorporated held its annual meeting on May 13, 2026. This is for Glass Incorporated, a company that makes glass containers. They had 153,284,461 shares of common stock outstanding as of the 18th of March 2026, which is the record date for this meeting. The first big item was the election of directors. Shareholders voted to elect all of the nominees to the company's board of directors for one-year terms. It is good to see that all nominees were elected. Let's look at the numbers. For Samuel R. Chapin, there were 128,906,417 votes for and 2,610,427 votes against. That is a pretty strong showing for him. David V. Clark II also got a lot of support with 126,867,269 votes for and 4,640,360 votes against. Eugenio Garza Garza received 129,078,465 votes for and 2,508,773 votes against. It looks like all the director nominees got over 120 million votes in favor, which indicates solid shareholder confidence in the current leadership's direction. Next up was the ratification of the appointment of Ernst & Young LLP as their independent registered public accounting firm for the fiscal year ending the 31st of December 2026. This means shareholders are essentially agreeing with the company's choice of auditors. The vote here was overwhelmingly positive, 132,246,776 votes for, and only 6,638,464 votes against. This strong ratification suggests shareholders trust the firm that is auditing Glass Incorporated's financial statements. Finally, shareholders voted on the compensation of the company's named executive officers. This is an advisory vote, meaning it is non-binding, but it still sends a clear message. Here, the vote was 126,880,688 votes for and 4,831,872 votes against. While a majority voted in favour, the number of votes against is higher than the votes against the auditors or directors. This might indicate some shareholder unease about executive pay. Even though the proposal passed, it is worth noting that even though this is advisory, companies do pay attention to these votes. A significant against vote can put pressure on the board to re-evaluate compensation strategies. Looking at the broader context, Glass is a major player in the packaging industry. Recently, there have been news about directors receiving stock awards, which is a common practice to align their interests with shareholders. For example, director John Humphrey received a stock grant. However, the company's stock did fall on Q1 2026 earnings, so there is a bit of a mixed picture. The voting results here show a general approval of the board and their auditor choices. The executive compensation vote, while passing, shows a segment of shareholders are paying close attention and perhaps are not entirely satisfied. This is something to keep an eye on for potential future governance changes. In my opinion, the strong support for directors and auditors is a positive sign for stability. However, the advisory vote on executive compensation warrants attention. It directly reflects how shareholders perceive the value they are getting from their leadership. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Thanks for watching. See you next time.